Welcome back, folks. How are you all? I believe everyone is cool. So here is another episode about the London session. If you have watched my last video where I have explained this small price action over there, and now when I outlined the sell setup around the London session, some of you got confused. So this video is gonna make sure that you will be over sure how the price action works. Okay. So let's go to the video, but before going that video, make sure that you have given me the thumbs up and you have subscribed to my channel if you are new. First, I would love to tell you something about the price. Every single day is different. The day starts around 6 p.m. in New York local time, and the day is actually end around 5 p.m. New York local time. So there is a gap. Okay. So 5 p.m. to 6 p.m. there is a gap. If you ever see a imbalance over there, then you should mark that imbalance as your new day opening gap. If you see, this is the closing of 5 and this is the opening of 6. Okay, so there is a gap. This is called new day opening gap. Every single day you will watch if there is a gap or not. If you see there is a gap, then you should mark that gap and also the constant crossman. Now I would love to mark the constant crossman as well. So let me mark it actually from here to here and 50%. So this is the constant crossman. I would love to mark that constant crossman there. Just a second. And here. Okay. Not tick by tick, but please mark it tick by tick because it's really so important and you should mark it perfect way. So if you have marked that new day opening gap already, you have already done a lot of job. Every single day is different. Why I'm telling you that? When market close around 5 p.m., then market actually take a rest or sleep for 1 hour. So this 1 hour sleeping, market forget everything. I'm trying to give you an example so that it's gonna be little easier to understand. Okay, so market has a disorder, and that is called short-term memory loss. After taking that small nap, 1 hour nap, market forget what it was doing. That's why most of the time you will see around the Asia session it's consolidating because market don't know what is going to happen. Then when it goes some specific area, then it started to remember what was happening yesterday. Then it started to follow the previous day's PDRA. Then we will actually connect previous day's point of interest with today's point of interest. Okay, this small story will help you to understand the London session only, because from Asia session to London session, around this area market keep reminding what was happening yesterday because it has a short-term memory loss. I'm just giving an example, try to understand that fact. Okay, it has a short-term memory loss and it was trying to remember what was happening yesterday. That's why London session most of the time it's a two type of situation. First, it is going to make the liquidity. Sometimes it takes the liquidity. That's why it's difficult for me to trade the London session. And I don't trade the London session, but sometimes the price action is so beautiful around the London session. Now, if you know that the London session is fully independent and it's the starting session of a new day. So you should have think that it's gonna take liquidity or it's gonna make the liquidity. If you just think about that way, you won't care about the previous day's parallel gap or anything. If you have watched my last video over there, I explained where your short entry will be valid. That was validated yesterday. It will be validated today was also, but depending on today's price action. That means London session is gonna tell you what is going to happen today. Yesterday's price action, today's price action is absolutely different. You can't compare yesterday's price action with today's price action, at least not in the London session. If there is something which is obvious, then maybe you can compare them, but right now it's important to tell you this last parallel gap is not going to determine your sell setup, where yesterday it was going to determine what is going to happen. Time. Time is the main factor. Yesterday around this area was the last hour. Now here it is the first hour. There was the last hour. It was important, extremely important. Here this is the first hour. That means market has the whole day in front of itself. Make sure that you understand the time differences. Now, what do you see over here? This is the new day opening gap. Market was consolidating around that area. Then finally, market tapped to this new day opening gap, went higher. When it went higher, what it has done? It has taken this relatively equal highs. Let's see, this high and that high. They are relatively equal highs. Okay, it has been taken this relatively equal highs. How did it take that? Buy side liquidity, by body. So this is not shallow. That means market didn't make the buy side liquidity. What else do you have? You have the sell side liquidity around that area from yesterday. Here, sell side liquidity. Then new sell side liquidity around that area. This low, relatively equal low. So you have sell side liquidity. You have this imbalance around that area from 15-minute chart. Okay, so here to here. This is your imbalance from 15-minute chart. So let me actually mark it little nice way. So yeah, this is 15-minute imbalance. What do you see? Market has taken this buy side liquidity. It tapped to this 15-minute fair value gap. Now, is it recent fair value gap? No, it's not recent fair value gap. That means you didn't wait for a new fair value gap over here. Why you didn't do that? The reason is this is the first hour. Market didn't go anywhere. It just started to trade. You don't need to wait for making a new fair value gap over here. But if you look over here yesterday, when market was falling, it's already a lot of price action. Now after this big fall, if you want to look for a buy setup, you should wait for a buy bullish fair value gap. But here around that area, you don't need to wait for a new fair value gap. If you find out something around that area, because that was also the London session. In London session, look the price action. Compare this price action with this price action. Over here, market has taken all the buy side liquidity, then it fall. See? So London session is the starting of the day, and in this type of situation, you don't need to compare the price action you did yesterday. You have to forget the way market forgets everything. Same thing, you have to do it. I would love to go hourly chart now. Now from 15-minute chart, you have seen that market has traded that 15-minute fair value gap. But if you come to hourly chart, what do you see? See this fair value gap? How beautifully trade that hourly fair value gap from hourly chart. Market has taken this buy side liquidity, trade that hourly fair value gap, then it is falling. How far it can fall? For this sell side liquidity. At the same time, it can make the new sell side liquidity around that area. It can do that as well. Why? Because this is the London session. London session make the liquidity or it takes the liquidity. Now in above here, it didn't make the liquidity, but here it can make the liquidity. Here it has taken the liquidity. It can make the liquidity here. Okay. So I'm going to 1 minute chart now. Now from 1 minute chart, some of you are confused. I am above the new day opening gap. So why I should look for sell? Here, if you watched my execution video and not execution video, actually the outline on my Twitter, when I saw this over there, I took a screenshot and I uploaded that. Then when price came here, take this relatively equal lows. See this low and that low. They are relatively equal lows. When it has taken this relatively equal lows, I just gave you another screenshot. That means I didn't hold my trade until that area. I'm not interested to hold my trade until that area. Why? Because this new day opening gap is very strong. It can stop the price, send it back higher again. It can do that. But from there to until this new day opening gap, I'm safe. Okay, from here to that fair value gap to until this new day opening gap, I'm safe. I can look for sell when market is here. When market came here, tap to this new day opening gap. Now I'm not interested to hold my trade for sell until I am getting the confirmation from 15-minute chart that this new day opening gap is broken from 15-minute chart. Let me go to the 15-minute chart. You can see this candle. this specific candle has closed below this new day opening gap. That means it has broken this new day opening gap. When it has broken this new day opening gap, I am able to look for another sell setup. From where? Can I take a sell from there above the 15-minute last fair value gap? Can I take a sell from there? No, I can't. Now I have a range from this new day opening gap to this last fair value gap. That means this small range I am able to take sell. I am not interested to take buy from there. Why? The reason is market has the sell side liquidity over here, and it's already almost the end of the London session. Maybe market has remembered everything what it was doing, so market actually will go toward the sell side liquidity. That means I'm not interested to look for buy. Also, I don't have any buy side liquidity. Do you understand the fact over here? So when you see market tap to this last parallel gap, then big move, this big move. No, I'm not interested to look for buy. I'm just thinking that this is also the reaction from the top of this parallel gap. Why I'm expecting that reaction from the top of this parallel gap? It has already traded the low of this parallel gap. It has been traded that low. It has been one time traded the constant encroachment, but it never traded the high of this parallel gap. So it can be the reaction from the top of this parallel gap. It can be a reaction from there. I don't need to be sure about that. But here, you should not look for sell. Why? Because this last parallel gap can hold the price. Previously, you have seen that this last parallel gap was holding the price. So don't look for sell. At the same time, as you don't have any buy side liquidity, you should not go for the buy. Simple. Price came here. What did it came? New day opening gap, low. Then it has given you another market structure shift. Where is my market structure shift, brother? See this low, a very small low. After taking all of this buy side liquidity, this swing low has shifted with displacement over here. A very nice displacement around that area. This is your market structure shift. After taking this buy side liquidity, this is your market structure shift. Where is your fair value gap? There is your fair value gap. Okay, let me mark it here. Now you will wait for an immediate reaction. Do you get any immediate reaction? 1, 2. Within 2 candle, price has traded that fair value gap. So here will be your entry. Your stop loss will cover this high at the same time, the low of this new day opening gap. This swing high at the same time, this low of this new day opening gap. Where should be your target? Here, this low. Now, if you are overzealous, then you can target until this constant encroachment of the last fair value gap. But you have to take the partial when it will go, or it will tap the high of this last fair value gap from 15 minute chart. You have to take the partial. There is no other way. You can see market came back again until this fair value gap, but it's safe. I believe that it's absolutely safe. You are not going to be stopped out. And finally, it tapped over there and it is going toward that sell side liquidity. But my belief is market is going to make some kind of sell side liquidity around the London session. So if it can make the sell side liquidity around the London session, in New York session, it's going to be very easier for me to go for the sell. Okay, so here, this is one setup. And here, this is another setup. After taking all the buy side liquidity, market went lower, went higher, make another sell side, swing low, went higher, then displacement. Now, if there was no this swing low, this setup is not valid. This swing low is not valid. Why this swing low is not valid? Because look, market spent so much time before shifted. It spent lot of time. Now, why this swing low is valid, brother? It didn't trade any fair value gap. Yeah, I can see that it didn't trade any fair value gap, but it has a swing low on its right. It has a swing low on its left, which is higher than this swing low. That is why this swing low is valid for shifting market structure. You can say, brother, it doesn't have any swing low on its left. Look, this is a swing low, which is higher than that swing low. Let me show you that. It will be easier to understand. Look, this swing low is higher than that swing low. This swing low is higher than that swing low. This swing low is valid for shifting market structure. How did the market shift? Tap to the hourly fair value gap low, took all the liquidity there, Very nice displacement. Over there, what do you have? Around there, entry fair value gap. And here, sorry, here, this is your breakaway gap. Okay. So this is your breakaway gap. Well, is that an immediate reaction? How many candles does it take to tap this entry fair value gap? 1, 2. Where should be your entry? Here. Where should be your stop loss? Just above the breakaway gap. Where should be your target? This relatively equal lows from 1 minute chart. So let me mark it. Can you see this swing low has taken by that swing low by a shallow run? Not even a single body closed below this low. No body closed below this low. So this is a swing low, shallow run, which is my obvious liquidity. That's gonna be my target. So I'm going to target that swing low. And here I would love to talk something else. You can see 9 handle, and I'm really not interested for that 9 handle. That's why I was waiting to tap to this entry fair value gap. When it came to this entry fair value gap, I would love to take this entry from that entry fair value gap. Now you can say, brother, why you sometimes tell that when it tap to this entry fair value gap you will be in the market, and sometimes you wait for this entry fair value gap. That depends on your risk. I'm not really interested to take that huge risk, 9 handle risk in London session, where in London session if you can catch 15 to 20 handle, it's more than enough. So I tried to take the close approximately entry. That's why when market came here, I was interested to look for sell, and my stop loss is in that type of situation very small. If market didn't reach until that area, what did I do? In that type of situation, I would try to take an entry depending on that order block. Over here, there is some order block. I would try to look for an entry from the order block. So it different matter, but you don't need to that precise entry. When it tap to this entry fair value gap, you can take the entry from there, and that should be your target. If you are overzealous, you have to take the partial over there, and then maybe you can go for this sell side liquidity from 1 minute chart or until this last fair value gap from 1 minute chart, whatever you want. So this was to set up around the London session, and I believe that it's gonna be little insightful for you the way you should use the new day opening gap, when how long you can look for sell, and when you can only look for sell without, you should not look for buy, and why you should not look for buy. Again, why you should look for buy a sell, and how far you can go. Okay, if it is insightful, don't forget to give me a thumbs up and subscribe to my channel. So until the next video, cheers.